Hello, everyone. Welcome to our psychological, we could say, session. It's all about improving your mindset and particularly for becoming a better trader, the best trader possible, of course. And psychology, which is obviously correlated with risk management, we could say that psychology and risk management are the same sides of the same coin. So are the most crucial parts of being a successful trader and a proper trader. So it's not so much of how much knowledge you have about the markets, is regarding you are controlling yourself, knowing yourself, control your emotions, and having a plan, an appropriate and adequate risk management. That's the very, very first thing that should be in your list. Knowledge comes second. Constant learning comes second. Because if we have the knowledge, if we are up to date with the markets, with the news, we are great on understanding the fundamentals. If we don't have the control, if we cannot control our emotions, our greediness, and etc., then what does it matter? I mean, you cannot control your emotions. You will proceed with some significant practices that are completely wrong and could ruin your trades. And we're gonna see all these mistakes in a bit. I have uploaded the handout as usual. This webinar is recorded. So once we are done, you're gonna receive your the recording in your inbox. So basically, we're good to go. Welcome once again. Also, for anyone that is new here, or for anyone that is his first webinar of the year, Happy New Year to everyone. And we are ready to go. So, as usual, I would really appreciate if you have any feedback from me. If you're struggling with the slideshow, you cannot see it, if you cannot hear me, please stick everything into the question window so I could take action ASAP. Also, webinars@edgefm.com, our email address. Don't forget that. Me and the team, all the analysis team, are here to help. So anything you need, please don't hesitate to send us an email at webinars@edgefm.com. So in order to officially start, I need to go through the disclaimer warning. Guys, I can see that my microphone is working perfectly fine, but it will be, I will feel more confident if you just stick on the question box that you are okay as well, that is okay from your side as well. So, disclaimer. This material provides in general market communication for information purposes only and does not constitute any independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment leverage products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex and derivatives may not be suitable for investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find the full risk disclosure along with all our legal documentation, guys, on the website, in my HF area as well. Please don't hesitate to contact us if you need anything else. So, let's go. A quick reminder, lost. I'll bring it closer to me. Not double check your connection as well. So, we're good to go. What we're gonna see today, as I said, is all about the proper mindset, emotions control, trading psychology, and this is the same as I said, the different side of the same coin. Why I'm saying that? Because they are very, very strongly positively correlated. Risk management, and a proper one, an adequate one, helps you control your emotions. Proper mindset helps you prepare an appropriate risk management. So we're gonna see everything, common mistakes, common wrong thinking, and obviously how to improve it. But I would like today to focus mainly on what the majority is doing wrong, including myself as well. Okay, right? We haven't. We'll all of us. I don't know how many newbies we have here. We started, and the most difficult part, it was to control ourselves. So over the process, over the years, and over trading, we learn our biggest weaknesses and our biggest strengths, right? So if you will bear with me a moment, I will share a bit of a background by myself. I haven't included the bio, just in case that we have anyone that is new here. It's Andrea, first of all. Andrea, market analyst here in HFM for 7 years now, but my time in the industry, it's more than 10 years, and I'm here, and the whole team, analysis team in HFM, is here for anything you need. Okay, so that's why I keep saying in our webinars, in our lives, if you anything you need, anything you want to clarify, anything you want help with, we are here to help. So don't hesitate, okay? So before actually we start, I would like also to clarify something. And the reason of this webinar and the significance of proper mindset. So I will like to keep things a bit simple. Like I'm a mathematician, okay? My degree, my bachelor and master degree is on mathematics. That's why I keep saying that you should, whatever you do in life, not only trading, you should try to have the probabilities on your side. Okay, the same stands for trading as well. Always trade with the probabilities on your side, right? The most important thing you can do as a trader is to know yourself and accept a loss as well, because it's part of the game. we wouldn't be talking about technical analysis, fundamental analysis, indicators today. Why? Because okay, that's quite straightforward. It's a bit boring stuff, because even if you apply them and you apply them properly, you will ignore completely what they show, just because you cannot control your emotions. So this is why we're not going to talk at all about indicators, about fundamental analysis, technical analysis today. These are stuff that can help you having the probabilities on your side, but if you don't know yourself, then what's the point? You will not apply them, or you might apply them in the beginning, but you will completely ignore them on the fear of missing out, on the fear of losing money, on the greediness if you're gaining money and you want to gain more and more and more, and so on and so forth. So what's the point? Okay, the stuff that keeps you in the market and stops you blowing your account is mainly your psychology, your thinking, risk management, and then indicators, technical analysis, or fundamental analysis. Has any one of you guys managed to empty his account any time over the years? Anyone? Anyone? Hands up or stick in the box, whatever you want. Anyone that has managed to ever in your lives to empty your account? A thumbs up. You can just put a thumbs up as well, and that will be okay. No? No reply? No one empty his account so far? One? Nah. Two? You're a bit shy, but that's not an embarrassment, guys. It's the inevitable, I'm afraid. At least in the beginning. A few paper trading accounts a number of times, me also. Okay, I was expecting that. Is for every one of us. So yeah, a lot of hands up. Okay, more than one occasions for sure, and that was quite reasonable. But what I can say honestly is that if you stick to some simple numbers, it can be hard to go completely broke, okay? So obviously you haven't stick on your plan, you haven't stick on what you see, you haven't stick on your numbers, entry, stop loss, so etc, etc. That's why you end up completely broke. But if you stick to some numbers, honestly, it cannot get completely wrong. You have to re-engineer your mind. Take control of it and learning to win and learn to lose. You might say, oh, Andrea, what are you saying? Losing? No, I don't want to lose. I always to win. Guys, it is part of the game and you need to accept it. What matters is try to limit it as much as you can in order at the end of the day or the end of the week when you're doing your review, your winning trades are more than your losing trades. So you end up with profit. This is what it matters. So you have to re-engineer your mind to take control of it. It may sound strange, but it's important as we are designed humans to keep ourselves safe. We avoid conflict. Adrenaline does that for us. We fight or flight. That's why it's not an easy, it's not something easy for sure. I love this quote from Jesse Livermore as well. and this is the way I wanted for us to start. There is, as stated, there is nothing like losing all you have in the world for teaching you what not to do. Voltaire as well. When it is a question of money, everyone is of the same religion. Unfortunately, this is correct as well. So these are two mottos that you should have always at the back of your head. There are a lot of other economists, mathematicians over the year that they mentioned they stated some very, very significant truths, I could say, and having this in mind will help you to have it on the back of your head, and it might be the way to control your emotions, thinking about that. So write down your favorite statement. Like, it might be one of Jesse Livermore, it might be something else, it might be from Warren Buffett, whatever. Write it down and have it in front of you on your desktop so you can look at it every day. It might help you thinking that, oh, now I'm overreacting, I should control myself. Now I'm like getting a bit greedy, I should take a step back. So that helps. That helps at least me. So let's move on. Over here, over the years, and after we repeatedly ask friends, clients, in order to spot reasons why we lose, why traders are losing, we have gathered around 12. Actually, the most important ones. There were other ones, but these were the top ones. So, sorry, and it would be good for you to try and find in these 12 reasons that I have provided, to find yourself. I mean, which numbers out of the ones that which of the reasons that I'm gonna present right now, you can identify yourself. So, first, too little capital and too high expectations. Because of lack of a significant amount of capital, or because we are afraid, we sometimes, well, there are a lot of clients actually that put like a capital as big as $5 or $50. That's not bad, okay? That's not bad. But you shouldn't have too high expectations, because don't forget that this is that based on the capital, okay, as much as you increase your leverage, your exposure in the market, there is a limited capital. So don't set too high expectations, because what happens next is you invest the full amount of your capital and you expose all of it into the market in a single position, and you lose it all. You shouldn't have too high expectations, that too little capital, right? An example is that you cannot invest 1,000 and expect 500, so expect the 50% of what you invest. That's a huge risk percentage. Too much risk. Killer and a very common problem. It's one of my mantras. You must reduce the risk. Having a 20 up to 30% risk each time is not proper, guys. I know that you are in a hurry. I know that you want to win fast, too much as well, but that's not the proper approach. Because if you're risking 20 to 30% each time in 3 trades, you might lose everything because you're risking too much. Also, another very common mistake, overtrading. Also a killer and also a very common and easy thing to do. However, do slip into under trading too. Waiting for the perfect setup and 100% sure of your decision, it never happens. Right? There is nothing like 100% sure of your decision. You might feel 100% sure, but it doesn't mean that it won't go against you for 1,000 reasons. That's why risk management should be in place for the unknown. So over trading is also a killer, the same as under trading too. Over trading also, it has also a psychological impact. We feel anxious, we feel stressed because we have opened a lot of positions at the same time. We cannot control, we cannot review everything. No, a very, very common reason why ending up in losing trades. But maybe the most important one is the fourth one, not knowing yourself. Not knowing yourself stands not only in regards to time frames, but also in regards to, actually mainly it has to do with time frames. Why I'm saying this? Because guys, knowing yourself. So Andrea, okay, myself, I don't know you, but I know myself. What I mean by that, even though over the years I presented a lot of strategies, short-term strategies such as 5-minute one, 10 minutes one, 15 minutes one, 30 minutes chart, because you asked me to, because there are people that they like trading and they are quite successful as well on those kind of time frames. But me as Andrea, okay, I cannot do that. I feel very stressed. I feel very stressed, very anxious. So I cannot. I don't feel comfortable. Don't feel relaxed trading in a 5-minute chart. But it's just me as a personality. It's not wrong if you want to trade in a 5-minute, 10 minutes, 50 minutes, etc. Even a minute. But as long as you feel okay psychologically about it. If you feel stress, then it's not you. You shouldn't do it. It's not your thing. You should change your approach. You should consider higher time frames or an hour chart or a 4-hour chart or a day trader. It's not you. You need to identify yourself. You need to know yourself. You need to, whatever you decide to do, whatever approach, strategy, etc., you need to feel comfortable about it. Okay? Also, let's move on. 5, 6, 7, and 8. Another killer of 1,000 of trades. If I would say a million of trades, not 1,000 trades. Is if you do not trade with stop loss and take profit. But please ask yourself why. I'm really curious. I'm sure that there is someone that has traded over here that has traded without stop loss and take profit. But I would like you to ask yourself why. And don't tell me the usual, because I don't want to be stopped out, or because I want to maximize my profits and etc. Or I know what I'm doing, or no. You need to ask yourself why you're doing that. Why you trade only with a take profit? Why you trade without stop loss? Why you trade without none of the two? You need to ask yourself, and you need to consider whether this approach is appropriate and correct. My name is Abidi. It is 100% sure to copy someone trade. Is this a question or not? I'm not quite sure, Abidi, what you mean. You mean like from copy trading service? Yeah, it should be okay, but considering that you agree with their decision. What I mean, if you are referring to the copy trade service, first of all, okay, there are a lot of strategies, right? You need to check whether these strategies are successful or not. You cannot blindly copy someone without investigate a bit about him and his trades, right? That's why we provide all these scores, data, their success date, their success rate, and etc. So this will give you a nice feedback whether the trader, the strategy that you are you want to copy, okay, it's a successful one. It's a successful one. So first of all, that limits choosing a successful strategies. That's also something that limits your risk. Second, even that guy is fully successful, etc. Every time that he opens a trade and you copy him, you're getting an alert about that copy, right? About what he's doing, whether a position has opened automatically in your platform or in euro dollar buy because your strategy opened that trade. But it doesn't mean that you have to follow him every single time. What I mean, if you disagree with his position, you can close it. You can close it. So that's an extra. That's how can I say that? Yeah, it's not. You shouldn't blindly follow someone, right? And there is never 100% possibility on anything we do in life. What is the key is to increase as much as we can the probability. So even you asked about copy trade, right? By choosing a successful with high score of success strategies, you have increased your possibilities, your probabilities. If you monitor his trades as well, in order to double check whether you agree or not and close all the ones that you don't agree with. Another thing that increases your probabilities for success, right? So copy is there for people that they don't have the time to follow the markets all the time, that they don't have enough knowledge and they can learn from big boys and etc. But it doesn't mean that you shouldn't try to monitor the strategies that you're following in order again to have the probabilities on your side. Also, if your strategy decides to scalp the NFP or decides to trade the NFP, but you don't feel comfortable about it because you know that NFP is a very volatile event, you don't want to risk. You can ignore that trade. So also be up to date with the events. Copy trade is there to help you, not to blindly provide you profits. Could provide you profits, could provide you also some losses that you are not willing to to take, right? So increase your probabilities. Don't just blindly follow someone without questioning about his trades. He is successful, yes, that's why you're following him. But if there is anything that you don't agree with, then don't do it. Hopefully I reply to your question a bit, Amy. But nothing in life is 100%. It might be 80%, it might be 90%, it might be 99%, but nothing is 100%. Because that guy might be the most successful trader in the world, but it cannot be always right. Make a Google search about the biggest, the most successful traders of the world. Okay, the top one might be Warren Buffett, but all on the history of his trades, he had some losing trades as well. Also, 6, cannot accept losing, need to win. Okay, I think we have already covered that one. It's a crucial one, but I think we have already covered it. 60% win rate, not enough. No, guys, it's more than enough. Again, don't expect too much. Put some targets, put some goals. Say that every week, I want to be on profit and I want to at least have a profit up to 15%, 20%. Okay? And I'm accepting a loss only up to 5% of my capital. Put some limitations on yourself. Ooh, that's a good mentality, Madhusudan. That's a good mentality. Slowly, slowly. That is a very nice phrase that my grandma used to say, but I don't know how to translate it in English. And you know, in a bag, you should like save one bean every time, one bean at a time, and you will have at the end an appropriate amount of beans. So it's not like that. There is a phrase, but I don't remember it in English. Never mind. So 7, no trading plan. No, for God's sake, don't do that to yourself. Don't do that to yourself. Is there an appropriate percent of risk per trade? Yes, there is. It should be less than 5%. Less than 5%. Okay. Okay, I'm a bit conservative. I would say 2 to 5, but yes, that's again up to you. But it should be reasonable. Okay, I know that 5% might sound too low, but it limits also compounding one step at a time. Yes. Yeah, okay, or at least Madhusudan, I agree that I understand that 5% might be too low for you, but you can set a rule about 5% risk, okay? Or you can set a rule regarding risk and reward. You can have 3 to 1, or 2 to 1, or 5 to 1, and etc. But be careful. No patience or discipline, too much ego, right? Patience is key. That's why you need to identify whether you are someone that has a lot of patience or someone that has patience 0. I don't have a lot of patience. That's why I'm a day trader, not a 5-minute trader. I'm an intraday trader, but 1 hour and above. So you need to consider whether you have patience, whether you have discipline, and if you need to try and put them at the side. Too much of a hurry turn the telescope around. It's difficult. It's something very, very difficult. It needs a lot of practice, But sit on your hands, put a trade on, try do not look at it. Can you do that? Can you open a trade and not look at it? Have you ever done that? It's a really hard thing to do. Try it, and it's a great way to deal with your emotion. It is hard because money is involved, but try it. Obviously, by placing a support and a stop loss and a risk and a take profit levels. Okay, I don't want you to open a trade and just try not to look at it without having a stop loss and a take profit, right? Okay, let's move on. Last 4 points. Poor timing. It happens. A skill you can learn like any other skill. Yeah, and don't try not to fight with yourself. If you think if you have missed an opportunity, that's okay. There are a lot coming. There are a lot others coming. Don't thinking and getting sad and said, if I bought back a year ago or 5 minutes ago. No, don't do that. Don't do that. If the timing wasn't correct and you didn't spot an appropriate entry, move on. Move on. Do not give system long enough. 10 or 20 trades not enough for statistical confidence. It's a very common as well. Give up too early because you're afraid. There is a lot. This is very, very common. Giving up too early because we're afraid and etc. But you need at least 50 to 100 trades for statistical relevance. Okay? No records. Who does that, guys? Trading plan and keeping records is the only way that you can spot what you're doing wrong. Not only from an emotional perspective, but also from a practical way. In a practical perspective, I mean, you need to keep everything. You need to have the plan written down and follow it blindly. And a second paper, putting down or Excel file or whatever is more convenient for you, keeping records. Because by keeping records, all of your trades, both losing and winning ones, you will be able to identify what you're doing wrong in order to correct it, and what you're doing extremely good and to keep it. Because you might consider by keeping your records that, oh, nice, day strategies works very good for me and 90% correct, etc. But the 5-minute chart using, I don't know, short-term short-term moving average is not my thing. I'm losing all the time. I'm doing something wrong. What I'm doing wrong? Have I set the stop loss too tight? Have I set the stop loss too far away? Have I entered too early? You get my point, I think, right? Keeping a journal, keeping records, write it down and put at the very end. We're gonna show you some examples, but there are many ways to do it. You must understand also the simple numbers. You must understand what leverage is. You must understand what margin is. You must understand stop loss. You must understand take profit. And most important of all, you must understand risk. No stop loss, right? No stop loss. I didn't ask how many of you don't use stop loss. I forgot, but never mind. No stop loss. Most people fail because when position goes accordingly, the next position they don't apply full rules. They just enter because they think they know everything in the market. I realize is trading all the time increases risk. We are in the market with the misconception of making quick money, forgetting that the market is also interested in collecting our money, right? Always think about that. We have entered the trading industry, the forex industry, on the misconception of making quick money. But don't forget that markets also want to gain our money from us. So we shouldn't do it easy for them. Can other traders see my stop loss? No, unless if you're a strategist. No, dear. No, they can't. Lack of knowledge. Lack of knowledge. You should act as a great professional trader. Don't blame others instead of yourself if your account is being wiped out. Instead, take a step back, close all your positions, and try to see why you have wiped out your account, what you did wrong. A lot of people say, once I open a trade, I feel greedy. That's human nature. The thing is to control that greediness. I don't know how to take enough profit. Learn. Learn where you should place your take profit. There are a lot of ways. Learn, learn, learn. Controlling my greed, trading on emotion. Now, take profits early. So that's an immature exit. And then, yeah, that's something that is very common as well. You open a trade, is successful, but you don't leave it to breach the take profit position because you feel that okay, it's a profit. Let's close it quickly because it might go against us. But that's saying that okay, with this way you are locking some profits, but you place your your take profit at a reasonable level based on the technical and fundamental analysis, right? So having an immature exit sometimes leads on a tempered re-enter. What I mean, closing position, okay, because we are winning, okay, let's close this position. And then you see that the asset continues on the direction of your winning trade and you want to re-enter just to take more profit. But that's a re-enter of the market. Without thinking it wisely, without thinking whether there is still steam to the upside, there is still support in order the asset to move on the direction that you used to be. So if you're gonna have an immature exit, okay, that's fine. But if you are considering re-entering, I want you to do all the steps from the beginning, checking again your technical analysis, your indicators, whether they show that there is enough momentum that is from this thing to the upside. What's the next pivot point in order for you to put your take profit? What's the new appropriate stop loss, and so on and so forth. Don't do it in a rush, tempered in order to gain more because you were mistakenly immature exit. How to get more profit? Sell or buy? It doesn't matter. It doesn't matter. There is not such an argument saying that, oh, you will find more profits if you buy, or you will find more profits if you sell. No. That's not the thing. It's having the probabilities on your side. And I mean probabilities. For example, if you're a trend trader, check your asset, find out whether there is a trend or not, either an uptrend or a downtrend. It doesn't matter. If it's an uptrend, okay, is it strong enough? The momentum is strong. If the momentum is strong, it means that it will last for a long time. So you are increasing your probabilities if you identify such a trend and participate on it on a long position. But you might find a very strong trend on the downside. So you should open a short position. It's not a matter whether you are selling or buying. It's a matter if you have spot from a technical and fundamental perspective, a strong, let's say, trend. Okay? Over leverage, don't do that. Big lot size and not being patient with trades. Right? Big lot size means that you have risked a lot of your capital. If you don't know how to measure your position size, then you can use risk calculator. Put on your entry point, your stop loss, the capital, the amount that you are willing to risk from your capital. So if you have 1,000 capital and you want to risk in a single position only 5% of those 1,000, then the calculator will give you the appropriate position size in order not to lose more than 5% of your capital in case that the market comes against you. Also, pull the trigger prematurely. That's greediness. Early trade and very, very wide, far away stop loss. No. Changing strategy. Don't change strategy all the time. That's over trading. In over trading, as we have seen, it leads to losses. Stick in a strategy that works for you and try to improve it instead of changing all the time. The 3 key criteria you should always focus on. Knowing yourself, we have said, we're discussing about it for how many minutes now? I mean, it's nearly an hour. But the absolute key, knowing yourself. We are all driven by our beliefs. You would only take a buy or a call position if you believe that particular asset would rise in value. You do not cross a major road unless you believe you can make it to the other side safely. Risk management, vital for success, are also an absolute key. And for me, the most important of all, CNA has spoken with hundreds of traders over the years, and the 2 things that continually come up is risk and management and trade size. You can have the best system in the world, winning 80 to 90% of your trades and still losing money. Risk management keeps you liquid, keeps you trading, and protect your capital. Right? Without risk management, you could lose your capital and you will be out of business. Risk management protects you to keep in the business, to remain in the business. Third, do what is probable. It's all in the numbers, guys, especially the percentage. Always do what probable. It can never be defined. It can never be 100%, but if you keep probability on your side, then you increase your chances of success. It is really all in the numbers, the percentages. That's an example. That's an example of how you can spot when and how you can. Sorry, I put the same question twice. I wanted to write when do you, or yeah, that's correct. When do you want to trade and when can you trade? You should answer these questions. Plus, you should write down, remember, on the records, you will keep a track of all your trades, successful, not successful, break even ones, and etc. With this way, you will identify what is best for you. So by keeping this record, you can spot whether you are very good on day trading and 4-hour trading, or whether you are good on 30 minutes trading. Keeping records and then doing analyze them in order to spot what is best for you is something very crucial. So also, as I said, you need to ask yourself two things. When do you want to trade? What that means? Do you want to trade all day long? Do you want to trade at your breaks? Do you want to trade around your work? Do you want to trade only in the morning? And so on. So you need to ask yourself, when do you want to trade? And then after that, you need to ask yourself, when can you trade? Because it doesn't mean that you have all day long free in order to focus on the markets. You might you might be busy with your own you might be an employee, you might be busy with your own business, and you have only the afternoon to trade. Or you need to ask yourself when you are available and you can trade 2 times a week, 2 times a day, 3 times a day, once a day, once a week. Okay, these are things that will help you finding an appropriate strategy and identify the biggest weaknesses and strengths of yourself as well. Also, consider, are you placed in, you need to consider your time zone as well, right? Also consider that. Because, for example, here where I am, in the morning, Asia market closes. So I am mainly awake just an hour in the last hour of Asia session, the whole European session, and just 2 to 3 hours of US session. The very first 2 to 3. So you need to question yourself. You need to check also which time frame, time zones you are placed. I think we have already mentioned all these. You need to be honest with yourself. In order to spot your weaknesses. I am, for example, I'm not patient at all. I overreact also in my life, and I'm trying to control these emotions because they impact also not only trading, but they impact also a lot of aspects in my life. So this is something that needs a lot of hard work, a lot of constant practice, constant learning, constant yeah, you need to work. There is a lot of time needed in order to work on yourself and improve yourself, because beliefs drive us as humans and as traders as well. As traders, we are dominated by our emotions. We have to be able to control them because it's our own money, right? It's not easy, but if you are aware of them, you know what's your biggest weaknesses on yourself, then if you're aware of them, you can bring them to your conscience in order to improve yourself, in order to control them. The 2 key emotions that drives all the markets are fear and greed. Also hope and regret, but mostly fear and greed. Active control helps, but never goes away. 3 main types of fear, guys, is first, fear of making a loss, obviously. And simply, it's what happens if you can understand the heat, get out of the kitchen. Second is fear of missing a trade. It happens when you are not at your screen, you've been looking for a trade setup, and it happens whilst you are away. Third, fear of losing a profit can be the most destructive one, That's why you see traders with many small winning trades, but still out of the money. And that's the reason, fear of losing the profit. So they close too early, immature exit as we call it earlier. There was an archetypical called Michael Douglas. He said that greed is good, but greed is good as long as you can control it, and as long as you have put some limitations. Okay, so how you can do that? Earlier ago, Sudan asked me what's the appropriate risk that we should take. There is a rule that it says 1%. Something is the 1% rule. It's always good either to follow that rule or set a rule of yours for yourself, but stick to it. Because having a fixed monetary amount rule, it will help you and could limit your it could limit the fear of exiting immaturely or over trading or setting your stop loss too far away or setting your take profit too far away in order to gain more. You know, we said another practice, wrong practice, is to set your stop loss, your take profit far away in order to gain more. No. You have to set your take profit and your stop loss at an appropriate, reasonable levels. And which are these levels? Immediate support and resistance levels, historically levels, psychological levels that have been proven, strong support and resistance levels, previous pivotal highs and pivotal lows, all of these things. Levels that are based on your risk and reward ratio. It's not just trying to add it far away. You might end up breaking even because it just quickly reverted. It's not that. So I don't think I'm gonna spend more time on I will move on a bit. I'm gonna just sorry for that, just skip some slides because we have verbally at least discussed all these. Over here I will just focus that you should concentrate on winning and making money, but firstly, that's a nice goal for you to have, but firstly you should make sure that you don't risk you risk only a small part of your capital in order to make money. Okay, also take some small losses so you can make bigger winners. It's like losing some battles but win the war, right? Always think about that. Taking small losses so you can make bigger winners is like winning the war. Losing some battles but win the war. That's the appropriate approach. If you don't try to preserve and manage your capital, then you're just gambling, I'm afraid. And that's the number one reason why traders fail. They apply this gambling mentality instead of trying to manage their capital with the goal of making money, right? So that shows a complete misunderstanding and lack of understanding of risk and failing to apply sound money management principles. Also leverage. when I said that you need to understand the simple words, margin, leverage, lot size, and etc. Without having knowledge of what leverage is and how this could negatively impact your trading account, then that's something that could also lead to significant losses. It's a double sword. Leverage is a double sword. Could be positive. It could have a positive impact on our trades, but it might have also negative impact and very, very, very huge negative impacts. It's your money, respect it. Treat it like a serious business, having a business plan, learning the market, learning all the news that could impact the market and your businesses. Preserve your capital, place some money management approaches as well and strategies. Treat it like a serious business. Never trade impulsively. Trade with stop loss and take profit, and accept losing. Remember, keep that motto: losing a battle, but winning the war. Look at that. For having a complete strategy, you need to have one part is basically the main is have a complete strategy. Part which will be actually the best risk management that you can do is having a complete strategy, find a trend, identify a trend, define entry and exit signals, and have a strict money management. This is what is the fourth part that could lead to successful trades. Is it a trader that survives? Is a trader that has these systems in place: strategy, money management, define entry and exit signals, trend identifications. What you said you were, I haven't asked you guys. What do you think about what's the other two steps in order for a trader to survive? Can someone tell me? We have the system, okay, which is the strategy. What else? What's the other two things in order for a trader to survive? Okay, risk and reward psychology. Brian is saying, do not panic. Mindset. Nice. Nice. Yes. It's stick to strategy regardless of existing results. Risk management. So I will say, okay, risk management and having a system, blindly follow it and stick to it. It limits all. It actually provides you control of your emotions anyway. But this is a good thinking, but very, very good thinking from all of you. Well done. Well done. And thank God no one replied mentor. Thank God. They are all correct except from mentor, my friends, because mentor can help you, but it cannot control you. Can help you learn the theory, learn, can teach you stuff, but it cannot control your emotions. So all these are correct except from mentor. Patience and consistency, yes. Risk management and patience, yes. Money management, yes. All, well done. Okay, it's getting a bit late. I have more slides, to be honest, but there are suggestions of how to keep how to keep records on how protected what to what's how to keep records, as I was saying, in order to keep your losses small. Also, there is a plan over here as well with risk and reward ratio. Not a plan, actually, it's an example in order to understand the maths. So, okay, that's just an example, but I would like really for you to keep an eye on it in order to understand that when you're saying, oh, I want to win 60%, I want to win 80%, how this is translated in money with a 3% risk and this different risk and reward ratio. This is how a potential win or loss is translated in money based on the risk that we have set and the risk and reward that we have set. So I would like you to have a look and even create your own based on the capital that you have, on the risk that you are willing to take, and the risk and reward ratio that you're thinking, and do something similar in order to see how this is translated in money. With this way, you will figure out where you prefer to be, in which column, in which row you're willing to be. Because, okay, 90 to 10 is fine for everyone. It's actually great for everyone. But how is translated in losses? How is translated in profits? And so on and so forth, okay? That's oh, I have put on some yeah, I have applied over here the 1% rule based on a 5,000 capital. Some rules that they might help you. They might help you create your own risk management system. This is an example of an appropriate risk management system. 1% rule, a limitation on the number of trades every day, 2 a day only. Winning ratio 60%, risk ratio 1 to 1.5. And this is how that end up. That's just a sample. Because as we said, we need to think about the percentage. Numbers matters. And as I said, you need to, this is the one, once again, the 1% risk. Here are some examples how the numbers help. So this is risk per trade, 111. Over here we have 1.8%, 10%, 20%. And look at that. Profit per trade, okay. Number of trades per week, number of trades per year, okay. Success ratio, number of winning trades, number of losing trades, total lost in losing trades, and total profit in winning trade. Triple number. So this is just a way to show you how well the 1% rule works. Look at that. 1% rule, 1% rule, 1% rule, and look at the profits here. Okay, 1.8, okay, that's nearly 2% rule. That's okay, 2% per risk. But as long as we increase to 10, 20%, look at that. And you can practice it yourself. You can write down and can right now then record your numbers in order to see indeed whether the 1% risk rule, the 1% rule works for you as well. This is not just nonsense, a random number that I put on. This is based over the years on a research and actual winning and losing trades. Okay? This is nothing new. 1% rule stands and it's a very appropriate approach. And it's also common sense and common mathematical knowledge, guys, and probabilities. Right? It's all about probabilities. I'm gonna call it a date, okay? The rest, the next slides are suggestions on how you can set your goals, your target profits, where you should place your stop loss, different systems that might help you. Practice them first, obviously. Some also further suggestions on how to determine the risk levels. And try to identify the one that you understand and you prefer. So yeah, guys, I'm gonna call it a day because we are here over an hour. I have this is actually it's 2 webinars in one because it was all about emotions today, but I have put the slides also of some entry rules, some exit rules, because I want you to have a look at it. These different approaches on setting an exit rule as well. But again, try them in a demo account. Why not in a demo account? And if anything of that works for you, apply it. Add it to your existing strategy. It might be patterns. It might be having positions only in the morning before you go to work. Anything that works for you. Go back into your demo account. Okay, there are some position management as well. And have a look on all these. Also, I have put on some calculators that you might find useful. It's the one that I was talking about earlier regarding the risk percentage calculator, in which it gives you can put on how much you are willing to risk and your capital, open position, stop loss, and whether you are buying or selling, and will give you an appropriate position size based on the risk that you chose. So these are some calculators that there are online available in our website. And feel free to test them, to try them, to see if they help you, and etc. A multi-time frame, multi-target approach is also very, very good. It's something that it limits losses as well, and is a very, very. It's actually a risk management, strategy, having multiple targets. Because with this way, you're locking profits. Okay, I'm gonna call it a date. The handout is there. Feel free to watch it on your free time. If you have any questions, don't hesitate to contact me. In a message. Anyway, this webinar is recorded. So as soon as we are done and I close it, I will provide it to the team and they will upload it in YouTube and in our past webinar website. So it will be there for you to see it again and again whenever you have free time. So don't worry about it. Okay? Thank you very much, guys. I'll check your inboxes tomorrow, the latest, and either in the inbox or sometimes in the spam folder, you will receive the video, the recording, and the handout is here. You will download it. So yeah, thank you very much. Have a great day ahead. In a message, I can see that you are a newbie. Don't worry about it. Go into our past webinar website or in our YouTube channel. You can find the base webinars for the basics, like for very beginners, from newbies. Whenever you have free time, try to check those webinars as well. And anyway, we have webinars for beginners all the time. since you're here and I've seen that you have registered and you have watched this session, it means that you are willing to learn and you are willing to work hard in order to have a business in trading. So you are in a good path. Okay, it needs time and dedication and consistency. Thank you very much, guys. Have a great day ahead. See you again tomorrow. Michalis, my colleague, will have a live on inflation in US inflation. So please subscribe to our YouTube channel in order to get an alert as soon as he is live discussing about the inflation tomorrow. See you. Bye-bye.